Good afternoon, everyone. I'm Bagadan at Stock Market Caddy, and today is April 3rd, Thursday, at about 5 p.m. Markets have been getting hit lately, and a lot of people are asking the question, should I sell? Should I close everything? Should I get short the market? Now, we can't answer and we won't answer specific investment or trading questions like that. I am not a broker. I am not a financial advisor. I don't manage anyone's money. We mentor those folks that want to be able to make those decisions using our algos, our algorithms. So let me show you one of them, and let me share with you what our interpretation is. And you can maybe write this down in pencil, on paper, and see how it plays out. This is Swing Machine Plus. By the way, I am Bagadan at StockMarketCaddy.com. SMC, Stock Market Caddy, the Swing Machine Plus. The VIX is the fair gauge. On a daily basis, 26 days ago, not yesterday, now more than 3 weeks ago, it went long. And when it went long on February 27th, that was a warning that the markets were spooked. Maybe it was over the tariffs, maybe it was over something else, but they were scared. The ES, the S&P futures contract, which represents a leverage bet, this is where the banks play, on the S&P 500, the SPY, the SPX. The S&P 500 went short on this tool 28 days ago, 2 days before the VIX. So maybe the VIX in this case wasn't leading, it was responding to this. And that was on February 25th. And yes, the difference between the entry price and where it is now is some 10%. The money that you see here is if one had gotten short the market at that time with one mini futures contract. The NQ, the NASDAQ, 27 days ago, 12.85% real time, one mini contract 55, a micro 55,000. A micro would have been 5,500. 10 minis would be 550,000. The Dow 29 days ago. And the Russell 72 days ago. 17,000. Now, where are we now? Well, our experience is this definitely is not where you want to initiate a short position. No. The time to have gotten short the market, the time to have bought insurance contracts would have been 27 to 28 days ago. We now have the VIX, the fair gauge, in euphoria. The markets are in panic sell. This is not where you initiate a short, so we would not. You can do whatever you like. By the same token, it's difficult to try to come in here and get long in a big way. That is, to start buying everything. If you are an aggressive trader, you might be able to nibble around the edges with options, playing for the bounce, because there is going to be a bounce, and a fairly hefty one. We can't say with certainty, but we can say statistically that within 20 to 25 days, there is a 95% likelihood that the markets will be out of panic in moving back toward their mean. Their mean for the ES is 5683. The mean for the NQ is 19,745. The Dow, 42,189, and the Russell, 2053. Now, when we do that, the VIX will come in and we will be in the middle. And then the noise will pick up again. People will say the worst is over, including Trump, and others will say that, it was a buying opportunity. Now, we're not going to make a decision at that now on something that hasn't yet arrived, but the probability is that we're not going to stay where we are. In the very near future, probably starting in a few days, maybe Tuesday, Wednesday of next week, these markets will begin to what we call counter. They'll start moving toward their mean and the VIX will start coming in. When we get back to the mean, then you'll have an opportunity to reassess. If a person has big fat profits, they can begin to take some of those profits. If they're still fearful, they could begin to insure their portfolio. Right now, the daily trend is down. And that counter trend will be what we call a rip. Not a dip, a rip. Rips are to be sold, not to be bought. When you're trending up and the market pulls back, yes, you can buy the dips and do very well. But the complexion of the market has changed in the last 3 to 4 weeks. We're now trending down. So these vicious rallies that will come and will create quite a bit of noise, we will be viewing those as opportunities to sell. How long will this last? We don't know. Nobody does. But it appears, if I change this to a weekly basis, which we can do, and you can do this with the other markets, we're just commenting on the indices. The weekly is now in a downtrend, just 2 weeks. The NASDAQ, the YM, and the Russell, they have been in weekly uptrends for a few years now, and so they're just turning now. So it appears to us that the complexion, for whatever reasons, you can attach whatever narratives or reasons you want to, we won't add to that noise. But as far as the indices, the stock markets, they are now trending down. There will be vicious bounces, but they will be rips, counter trends, or what the pros on Wall Street unfortunately call fish hooks, where they try to gaff, where they try to fool the people to send them more money. It has changed. If you want to learn how to use these tools to manage your own portfolios so that in the quiet of your own home, you can begin to make very informed, objective, and consistent decisions. When to buy, when to sell, when to get insurance, when not to get insurance, and be diversified in what you can do. Feel free to visit Stock Market Caddy, CADDIE. Send us your questions. You can be a monthly member and get to see these tools every night, or you can get these tools, some 65 to 70 of them, on your desktop with the instruction on how we go about using them so that you might use them too. I wish everyone the best. You can call me any day, including weekends from 9 a.m. to 9 p.m. at 813-758-8263. Good luck, everybody.